The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, the Tiger Technicians Hour on the 6th of January. And so, yes, I knew there was a 6th of January. 6th of January. Give me a second here. Just suddenly I realized that there's somebody in the family whose birthday is on the 6th. I'll think about it. Certainly not the close family, because nothing there registers anything. So Dow's down 184, S&P's at, so that's at 16,973. The Dow is down 18 at 1998. The comp index, let me just move this away for a second. Comp index is down 34 at 48.57. Trinity's at 1.79. And it flashed a signal yesterday, which I used for my subscribers. I didn't know if it would work. We'll see. I'll talk about that in a moment. And that signal is that there should be a very strong E-mini rally, S&P mini rally, that is reflected in price action on the upside in the S&P, which would also affect the Dow. All right, well, let's go on. E-mini, as you can see, is here, down 21. Now, what it did is it made E just a tad lower than the trend line support. Is now way above that. Oh, it's so important. We're going to talk about that. We're going to talk about the 120-minute, which made an arch. You know, my rule of thumb is that if whatever you're looking at in the pattern that I call the Chapman wave H pattern, if you take out the left side low, you've got just one bar to go below it and maximum of 2 bars if you close below it once. So that means you've got the H pattern at 1980.25. The S&P yesterday closed below, or closed way down at 1973.75. That left it for today to close well above 1980, and so far, so good. We're at 1989.25. I just want to finish the other numbers now. Let me see. Can I move that away? Yes. So gold. Now, this is going to be really important. Let me just get the gold contract up here. Why? Because if the last 4 sessions, what's that, Wednesday? 1, 2, 3, 5 sessions. If the last 5 sessions were I've got to phrase this correctly, because I don't want to sound like I'm just this great optimist or anything. I'm a realist, believe me. I'm quite prepared to. We want to be adding shorts. We've got all the shorts that lined up there. We have some shorts which are working real well. So that's got nothing to do. And we've got longs that seem to be working out well so far today. So I don't want to sound like I'm I'm just Pollyannish. I'm not. I'm trying to be realistic, and what I'm saying is that gold, I'd said for about at least the last 2-3 days, that gold should be pushing up more than 34 points, 38 points, 42 points. We should, in fact, right now, gold is at 1087. That's really not, this is a 120-minute chart and a potential leg E. Maybe it's recycled, but it doesn't matter. Whatever it is, it broke out of all the resistance at 1081.40, and that's a good sign. But if you're looking at these charts, the daily chart and the weekly chart and the monthly chart, unless gold is pushing into the 1160s towards the 1200 area, I just don't think that this is anything other than reflex technical rallies. It's not what you would expect, and I suspect that the real big thing is, with gold up 8 at 1087 right now, the real thing is this guy. We're not sure if it's a guy. This instrument trading at 99.36, down 4 cents, is the dollar, and the dollar is just holding magnificently. The weekly chart has got nice price movement so far, with half the week done. All I can say is, within the context of the chart as it stands right this second, even though we only made an 11-cent recovery high to go to leg C in the monthly chart, leg C/F in the weekly chart. I think it's C because there should be a D to come. I'm looking at something very impressive. just right now. I mean, by the end of the day, I might have to say something else if the dollar suddenly plunges below 98.30, $98 support. But right now, it is actually acting very well. And that makes me suspicious and saying that the broad commodity sell-off, dollar TRCCI, remember this is the Reuters equal weight commodity index. Maybe this is the one index that shouldn't be equal weighted, but it doesn't matter, it is. And it's got everything. When I say everything, when I went through it, I was surprised at just how much it had. It's still pulling back. Look at this, a nice spike to the upside, bam, comes down daily. The monthly is in leg. I wonder if this could be a recycle, A, B. It's in leg E/B, and it got repelled again from the 9-period moving average. The monthly chart, I have to tell you, a close below this little doji candle right here, the low E, still leg E on the downside. A close below 366.82. It's now at 373.34.340. So that's a long way to go. 380. Sorry, let me get that right. 366.82. Maybe not so much. 14 points. Yeah, if you're looking at this, you've got to say to yourself, what on earth is going to turn, if it hasn't done it over the last couple of days, what on earth would be able to get the commodity index to really have a powerful rally? It's way below the 200-period moving average, way below the 9-period moving average, way below that uptrend line, that massive uptrend line that goes on forever. Look at that. This is a horrible looking chart. And to unchange that, to really get not just a reflexive rally, to get the weekly, let alone the daily, to get the weekly to say, now we're making higher highs and higher lows. I can't take one low. We have to go above the high that was made at 380.90 last week. We've got to go beyond that. And then we've got to make a higher low on the retracement and a higher high. That'll say, great. Now we've got at least a leg A, and they went to a peak A, and now we're in leg B. Something like that. But even then, it can't be hanging around in this area. It's got to be up in the 380s, the 400s. Then I'm going to say to you, wow, I think we've got a commodity change. I wish I could, because, you really need to have commodities again. This is a deflationary period. Stagflation is not a good thing. So if you can't raise prices because of the international pressure in every single area for your business, look what happened to the Boston Globe. Boston Globe has a bad delivery service that's delivering the newspapers. So they try to change it, and they do it like all in one, and they take it from a California company that's never done business, has no clue as to the kind of traffic jams. There were no trials, no nothing. And they just completely screwed up. And here it is, the Boston Globe finally turning around off that horrible period that they really went into a depression with the 2008 collapse. New York Times is going to sell that. It was just a horrible scenario. And they finally were coming back. The magazine sections now sometimes is half an inch thick. And then, bam, they do the wrong thing. And what it is, it has to do with not being able to initiate competition in a way. They did this completely wrong. Okay, that's enough of that. I want to get to some other things in a moment and talk about this rally that's going on. I'll show you the 10-minute chart right here. I'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So I've got a quick question in the den. I don't want to give a quick answer to it because it's been one of the great stocks. Skyworks Solutions screams just the darling of the 2013, 2014, 2015 period, right up until until June, I think. Then it's about 112, trading now at 70. And the question is. Question is from Mark in Maine. Basil, any chance you could look at SKWS, please? Yes. This is making an M-shaped pattern in the weekly. Made a peak F and then a peak E in the big monthly chart, the long-term charts. The first one had a very sharp pullback. Brand new one began, and it went to the high in 2015. Now it's looking like it's trading at this very moment below that Roman candle of August, down to the 70.80 level. We're trading at a 70.39 right now. On the long side, I wouldn't touch this because the weekly chart says you remember the pattern I was just looking at right now, where the left side was taken out by the right side, but we had one bar in which to go right back in. Good grief, what was I looking at that did that? Well, that was very important, and it wasn't this. Okay, let me just have a look at my list here. Oh, that's right. This is the Reuters Commodity Index, as I recall, and that's exactly the same pattern. TRCCI. We were talking about the left side. Yep, left side, right side of the larger move in the monthly. So now what I'm looking at is, if I can go back to Skyworks Solutions, SWKS, we were trying to get the symbol right. I'd be real careful. Now, would I short it? And you remember yesterday there was a stock, can't even remember what it is, or maybe it was 2 days ago, and I was asked about the stock, and I said I'd initiate a short position right here because I want to be in it in case there isn't that rally that gives you the best risk reward, but it would be a very small position, and I would add to it if it was moving up, or I'd make a decision to add if it broke whatever level you got in at and it was going down. But that would initiate the position. So in Skyworks Solution, right now, gapping down. I don't know if there's news or whatever it is. This is new territory to the downside. It's taken out the low of the 24th of August. So that says to initiate a short now is probably a correct move looking at the monthly chart and the weekly chart. But risk reward, it says, wow, it could be real close to at least a decent bounce. And the decent bounce could take it from 70.51 to 76.77. I don't want to risk 10% on that. So I'm going to say to you, I think it's going much lower. Where would the ideal shorting position be? I started a little nibble on the short side at 74.5 to 75.30. My real position would probably be if it starts to fail between 76.80 and 78.25, somewhere in that area, if it can even get there. If it can't get there, then you've really missed the very best risk reward. But that doesn't mean to say right at this moment at 70.50, you could just initiate a nibble to get a real feel if you think it's going much lower like I do. But it would just be a nibble, and it'd be because you'll keep your eye totally focused on it if you actually own it. If you don't own it, certainly for me, I already forgot, the similar stock we were looking at just 5 minutes ago. So I'm not good. In fact, I've got a really horrible story to tell that turned out quite well. Some other time. All right. So what we're looking at here so that's Skyworks Solutions. I've got a bunch of other questions, but one question that I had right now is the first one that came in. Let me just quickly look across here, if you don't mind. Got to get the right mouse for the right computer. Okay, that's a good question, and that wasn't the first question. I just want to go in order of the questions. Well, will I find it? There was a question that came in, and now I can't seem to. Oh, there it is. Hello from Stan. Basil, I would appreciate if you would give me some safe stock ideas, 2 or 3 stocks for a long-term hold for dividend income in the 3 to 6% range. Looking for minimal downside on capital gains and plus on the capital gains side. Much appreciate your help, Stan. Stan, I'll answer you separately. I know that for subscribers, we have, in fact, got 2 dividend stocks. You could call it 3, but I'm going to call it 2 for now, because I don't even know if one was, the little bit that we have is stopped out. But I did that earlier in the week. Last week, we started positions in dividend stocks. One gave a dividend today, in fact, so I lowered the stop on it quite a lot, just to make absolutely sure that we got the dividend and we were in the stock, because I love it. And that stock right now is exactly the price that we bought it at, with all the turmoil that's going on. That's holding very well, and the other one is up nicely from where we bought it. So yes, I do have some ideas, so I will email it to you, but you could also just have a trial subscription to my service. But of course, if you have my service, you know that I call them dividend and possible appreciation, capital appreciation stocks. So now let's do this. What are we looking at here? Let me go back to this 10-minute chart. Whoops, 10-minute chart. First of all, here is the 2 times VIX index, and it's pulling back from the huge gap up. It went all the way. Yesterday, this thing closed at, the TVIX closed at 658. Today, it opens up at 7.50. Where's it trading right now? $7.06, starting to fill in the gap. A lot of filling in the gap, but the day's young. We'll see the 2 fighting chart patterns there. What I really wanted to just quickly show you was this thing here. This is waiting for data. Why is that not showing? Oh, it's the 15. This is not the price, 2,101. That would have been 2015, March. This is the 16 one. There it is. So now we've started a brand new buy mode. I think this is F/B, and my target is the 1998 level, made at 10 to 3 this morning. And was that 10 to 3 when? Last night, before the big breakdown, yeah. And it should come in by 13:51, by 10 to 2 this afternoon. We should be trying to get there. We'll see what happens. I mean, the day's young. Okay, so that I wanted to get to that. Had a couple of questions. Let me see. I want to try and go in order of all the questions. A whole bunch of questions there in the den. I hope I can do this because big E and K. Oh, the REITs. Good question about the REITs. Okay, IYR. IYR is the REITs index. It's the iShares Dow Jones US REITs index. SPG, AMT, CCI, PSA, EQR, HCN, VTR, AVB. I mean, just a whole bunch. BXP, Boston Properties, just a huge amount of really major companies across the, you've got storage company, PSA. This is really a big mix. This is the first time in a long time I've seen the IYR, just like the Dow, have a really nice proportion between defensive, aggressive, oil type thing, whatever it is in the Dow, that we've got the mix of Microsoft technology, all this stuff, and now the iShares. So this, I think, is very reflective of a good index, at least my opinion, right? And it's holding well. Would I buy it? For dividend, I have to see. I'd like to give it another 2. I'd like to give it the rest of the week, because if it's a dividend thing, it doesn't matter if you're getting in a point lower or a point higher, because you're really looking at some stability with a dividend. I'll have to think about that. Oh, that was a quick break. What happened? That's my second break, is it? Okay, I'll be back. Basil Chapman, Tiger Technicians out. That will give me a chance to look through some of those emails, and we'll see what happens when we get back. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman. Dow is down at 160. Hey, this is still nothing to sneeze at. Let me show you something here. Probably I was in the middle of something that I was discussing a few minutes ago, and I've gone. It's finished. So a couple of questions I had here. So Judy asks, SPX, any way of knowing if we take out 1882, the low of 928.15 September, or if this is a buying opportunity? The move down we have seen is just normal pullback in bull market. Hey, I want to be as clear as I can. More and more and more monthly charts are breaking down. We've got, you remember I spoke when I was interviewed with Tom yesterday. Let me have a look at the stock right now. I spoke about AZO, AutoZone, one of the kingpins in the whole auto car truck part business, looking quite poor. I mean, it's holding okay, minus 172 now at 737, but it had a high just over 800. So this is a big move, already 10% to the downside. And the weekly chart is showing no signs of strength whatsoever, maybe a little bounce to the 9-period moving average of 749. So that's AZO. But that monthly chart is saying to me, I think that we're making a hat-trick top. A hat-trick top, meaning the monthly is in a G/C with a Chapman wave 2-bar reversal. So a close below the 9-period exponential moving average of 922, a close, would start to signal that there's some kind of a topping motion. The weekly chart is already in a sell signal by the end of the week. If it stays like this, that'll be a sell mode. And that's a peak D, double top peak D. You've had a peak D with a double top at 803.25 from the 6th of November, and now the 9th of December had a retest and it failed, and we're going lower. But maybe it goes sideways, but at least it looks to me like to get to 800, a lot has to happen. I don't think it's going to happen for many, many, many months. It might be the top for a year. We'll see. AAP, another one, very well-known advanced order parts, has already made a peak F top in the monthly. It's in a sell mode in the daily, weekly, and the monthly chart has got a sell signal. And at the end of this month, it could very well be a sell mode if it closes under 162. Let's say 160. Now you get to Orly, stock that we short, and a number of times. It's at 244. It is down 378. The weekly is already in a sell mode. I've got the down arrow. It's got a sell mode, made the H pattern, which is failing. That monthly chart is still very good, but it's holding the 9-period moving average. The technicals are starting to fail, but they haven't broken. The stochastic still at 86%. I'm thinking that there's a hat-trick top with a Chapman wave 2-bar reversal. And that's saying to me, from way back in October, that's saying to me that this is something to really watch, because if you one by one, look at the I'm going to go to Panera. Panera benefiting maybe from Chipotle, but still struggling. It still hasn't the 208 round number high. So we've seen restaurants, we've now seen the auto parts, we've seen healthcare, XLV starting to deteriorate. I'm doing this, Julie, because I want to just go through it, that I'm getting closer and closer to getting the kind of a sell signal to sell mode in the daily chart that reflects the sell signal in the weekly chart. So yeah, I understand. Yeah, for my subscribers, we actually went long the Dow this morning, right at the opening. I said it's just for traders. I'm giving an update between 2:15 and 2:30 today. Who knows? I might even switch to the negative side. I don't know yet. This is a very select move that we've got here. On the upside, there are fewer and fewer stocks that are participating on the upside, but it is important that there are some stocks that are doing, and they are some key stocks. So let me just say real quickly, I don't think we've made anything like a low. Well, we've made some, maybe a low, but not the low, absolutely not. So, but look, I wanted to show this chart once again. You see the pattern where we broke under the pink support line a couple of times, but we closed above it? Closing above it today, that is, there has to be a close in the Dow above 17,070. That is a long way. It's like 90 points from here to go. Actually, it's a long way. Could do that in a split second. But it is a long way when you've got this kind of selling pressure. If it can do that, there could be a rally to the 17,310s. Maybe we're right here. We're about to make the arch formation. Answer, Julie, is no. I believe we will be going to lower lows and lower highs, and we've got to be careful. This is still 4 of that Elliott wave, and the Chapman wave. We've not made that 1 penny above 17,381 to go to the new leg in the monthly chart, which would have started a whole brand new buy signal, in fact, in the monthlies. So right now, consolidation since May of last year at 18,351 is still continuing. We've got the same, almost like a head and shoulders pattern here. with a sloping degree. That's actually one of the bullish patterns. If you could, I can just tell you this: if the Dow's, I don't know what could do it, but just let's imagine some kind of fantasy world here, that the Dow in a week and a half is trading at 17,866. It's not that far away, but under these conditions, maybe it is. But if it's doing that, it's broken all that support. There should be a move that actually takes us towards the old high of 18,350s. That's a big if. And I'll tell you why. Because at this point, for me, a close below 16,900 with just 16,890 is the low today. But we've already gone below 16,957 in a very quick ETF. If it is ETF, could be a brand new sell signal to sell mode on the way down. But in the meantime, let's treat it as it is. Support line, SOFA's kind of holding. The day is young. If there is just enough action by the end of the day to get us to squeak to 17,065, somewhere around there, I said that's nice action. It's kind of like that little cluster formation that occurred right there. But unless, I don't see any chance now of taking out today's high of 17,154. That was the close of yesterday. I don't see that. But if there is a spark to the upside, that would say, hey, we've held that support level yet again. That's all. So all the action in looking at so many stocks, whether it is the stocks, I had a question. The next question was, what about Goldman Sachs? Is this a double bottom? No, we've broken down from the left side. That means that the low of 172.90 made on the 14th of December in Goldman Sachs, GS trading at 171.30 down 279. You have to close above that, not you. Goldman Sachs has to close above it, and it has today or tomorrow, because if it doesn't do it by then, it's going to go even lower. Now, what is important is that the 200-period moving average, it's sitting right on the 200-period moving average. Yet again, last time there was a fantastic spring from 167.49 back in the week of October the 2nd, and it went all the way to 200, well, 199.90. I would say that a move of 32 points that's meaty. That's really good. So your question, I would rather rephrase it and say, where is the question? Sarah asked the question. Is a complete double bottom pattern? Would you buy today? Would I don't think I want to risk myself anything in an area that hasn't been doing very well. We are holding stocks that have held very well. So far today, they're actually holding really well under the circumstances. I would much rather go to that than something that's just failing. So the answer is I would not touch Goldman Sachs, because even if it bounced, I don't think that bounce will go very far. So I hope that helps you, Sarah. So we'll be back. Hold on.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. Give me 1 second here. A quick question came in here. Basil, you're covering shorts based on trend or pattern NFP. Day reversal, they sell off good bottom near the NFP. Are you looking for annual January sell-off for 2015-14, now possible 216 for end of January? Okay. A couple of questions there, and they were good. One was, first of all, UNG. UNG is holding real well. That's United States Natural Gas. See, there's the arch formation in the monthly that went from an H to an M, failed completely, almost did a 1-to-1 to the downside. Now there's a sign that, yeah, you could have a bounce. And there's the bounce in the weekly. Nice action. But this week you've got to, and this is the way I read it, you've got to take out the high of last week of 887. Otherwise, this is just a single leg A up. So this is early, but so far it's holding well. The question is, would you be buying UNG? Well, the MACD and stochastic are really good. It's got a Chapman wave squash. It should go to C. So I would say yes. In fact, I'm going to write this down here for myself. Not that I'm going to do anything with it. Maybe yes, maybe no. But I do want to look at it. So UNG is the one that has the potential. Got to watch 833 to 822's major supports. I don't know what kind of stop you would like, but if you are in it, it needs very quickly to make leg C above 887. So that just make it real simple. And at 851, would I have a 20-cent stop? Probably have to have a 20-cent stop. Moves a lot quickly, but it's holding pretty well. I would still have a tight stop-ish. It's a tough one, all right? So let me see. So the question was, LMAT. Oh, very nice. This is $16.50. It's Le Matre Vascular Inc. Okay, so this is obviously some kind of I don't know if it's a biotech because of vascular. Maybe it is I think it's more mechanical. I don't know what it is, but it's in the area of medical instruments type area, doing really well. The question is, I'm making a profit in it. Can you look at in which I have a nice profit? Okay, let me make this. You're the one that got incorrectly, Ivan. I don't want to mess this up for you, but I am going to say, if you ask me, would I buy it or would I sell it right now? I would say that the weekly chart is still very strong under these conditions. It's acting really well. Very extended in the monthly, but these things tend to do that. So I'm not going to bother about that right now, although it could be leg E in the monthly. But most importantly, it has held beautifully the last 2 days. I'm going to suggest to you that if at 16.50 LMAT, trading at 16.50 up 28 cents, if by any chance it takes out the 15.64, that's a 90-cent difference. It's percentage-wise, that's something. But if it takes out the low of 15.64, take a little bit off. You might even want to take, under these market conditions, you might even want to take off as much as half the position off. Think about taking at least something off. What I would like to see, because of the action today, is by the end of the day, it doesn't give up half of that. It goes from 1650 to 1622. I'd like it to stay here. That'll be great if it can stay here. Because why? If there is any strength at the end of the day, rather than giving back all the gains that it's made from the lows of the day today in the down the S&P, if there's some kind of further gain, then this thing could pop a little bit tomorrow. And if we can get to 1677, the portion that I was just talking about, I would take that and I'd say this is the portion that has a trading stop. And therefore, you're going to make some kind of a stop. And I would say give it 30 cents as a stop. If it keeps rallying like a trading 30-cent stop, because in the weekly and the monthly, although the action is really good, it is a little bit extended, but I love the action over the last 2 days. The fact that it's up today, 1.73%, when the markets at one point were down over 2%. More than 2%. This is good action. So yes, congratulations. I'm going to put that down as well in my notebook, just to keep an eye on LMAT. I've never seen it before, first time. I might have hit it once before when I was trying to go for AMAT and hit the L instead of the A, applied materials. But anyway, so the next question I have here is, okay, just real quickly, looking at ASA, this is the gold stock that I like to follow. Yep, it's nice action today. It's up 14 cents at 745. We do not have any gold stocks. I'm giving it the day. I just didn't want to see the gold spike on news and then start to give it back by the end of the day. It's up 12 now, gold. So that's a good sign. The GDX is up. Now it's up 26 cents at 14.28. Nice action. Not great. It's just surprisingly bad action. But it's very good action if you're just looking at the market and you're saying what's moving up instead of down. In that case, it's acting very well. So yeah, if you want to nibble on some gold stocks, I think a reasonable little basket of some smaller gold stocks, maybe that's the way to go. I've done nothing yet. Maybe in my update, I'll do something, I don't know, 215, 230 today. So now let's go. There was one other question that I didn't want to skip. I'll get to that. Oh, that was the question on the Dow. I thought I just did it. I'm going to do it again. Look at the Dow chart. It's still just an ugly chart. On the weekly chart, you've gone in an arch formation. Today, well, this was really news related, but if the market is vulnerable enough, not at this point to be down only 85 instead of down 188, even though it was down, what was the low, did I say, on the Dow today? The low was all the way down at 16,890. We took out the 16,900 level. So the day is young. Let's see what can happen here. But most importantly, the weekly chart, the monthly chart, if this week we look something like we are right now, even with a rally, I have to say you've got that arch formation in the monthly chart. I've got to become more, as it is, becoming much more cautious. The stocks that we have on the long side, I'm looking more at the dividend type stocks. So we've got a little cushion. I'm looking at either the best acting over the last couple of weeks while the market's been choppy. I don't need to take chances. All right, so we took a chance this morning. We bought the low in the day on the Dow. Hey, I said it was a trading position. If it gave you a 1-point profit, put your stop in 0.30 cents above our entry point. So that gives you a nice protection. This is just, I might be switching sooner than I thought to the dark side. I'm not afraid to do that. You know that. I looked at the pattern and I said, wait a minute. I can't presuppose anything. Every time the market, the Dow, went to and even below the pink line, it managed to close above it all the way from May into the beginning of August, and it was only right there. That might resemble today, who knows, August the 12th, but it wasn't until you got to the high of 17,568 on the 18th at a peak A that became an A minus in a little arch formation, the final one, with the tiniest little rally of all the rallies that you took out the very next, bam, 2 days later, you were way under that pink line. That's why this is very important. In distance, oh, wait a minute. Wait a minute. Look at that. I'm going from there to there. I'm going to grab that line. I should have done this yesterday. There. Oh, my goodness. Yeah, it's a little early. Okay. But we actually did do that in time on the upside. It's the downside that we haven't done. All right. So we are skidding along this line here, and we're at this particular point. I'm pleased I did that because this is making a lot of things clearer. All right. I'll be back. Basil Chapman will have a final wrap-up. What is today? Wednesday? Oh, great program. Swimming lessons again. Oh, good program all day. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, a couple of questions that I usually get during the breaks. First of all, PayPal. What I said with PayPal was, what did I say? Has a drop bucket. Let me show you PYPL in the daily chart. Has a drop bucket pattern. It's the second one that it's got. What I can say is that the way it looks right now, what did I say there? It targets the 32 to 31s if there is no rally over 34.30s, if there's no rally over 34.30s by Friday or Monday. In other words, this is not looking very good. PayPal, 33.85 down 46 cents. Yeah, it's at the high of the day. Excuse me. But it's already taken out the low of 34.93 that was made back on the 2nd of December. Not a good sign. So I would put I would say that in January, I would not be surprised to see if PayPal tests the 30.30 low that was made on the 29th of September. Next question I had was BX, which is Blackstone. Excuse me. The Blackstone Group, they just always used to seem to do everything right. Boy, since May of 2015 at 44.43, next month was 44.05 was the high. Very poor action. If it closes on a weekly basis below 26.56, let me just have a drink of water. Whoa, frog in the old throat. And if it closes below 26.56 any time on any weekly basis in January, that monthly says 22.97, the 200 period moving average. See what I mean? So many stocks that were absolute, not just leaders, they were the kings going into 2015 and in part of 2015 have been failing miserably. So this is just, it needs to get to the 20, is it 20? That's BX is a symbol, 27.34 down 80 cents. Blackstone needs, in fact, to push above 29, so at least can take a little time making an arch formation, trying to get to 31 for the H to go to an M pattern. Not good. So before we run out of time, before we go, we wrap up the show for the day. VIX.X. So that VIX.X, the VIX index is at 2060, it's up 1.26. I don't actually like what's going on right now. I would have preferred if there was a rally, and then all of a sudden we went to a slightly lower low to scare the daylights out of everybody, and then got the very strong rally. This is topsy-turvy, so it's a little disappointing. So JB in the den, Basil, please don't catch the bug Larry has. We'll be watching reruns all morning. No, I'm fine. I know what this. I'm fine. Worked out today, off to tennis later today. Yep, I'm doing okay. 20.62, up 1.28. Look at that big gap up above the 9-period exponential moving average in the weekly chart. So we've got a couple of days to go here. And if this VIX stays in the 20s, remember, I've made it really easy for subscribers. I'm talking about the levels to watch. Above 22, you can expect triple-digit declines kind of daily. I mean, that's just the way it works. But if we can get back to the teens, the 19s, preferably the 18s, that'll say, oh, okay, just a moment respite here. But really, you've got to get to the 15s before you can get any kind of bullish action. So this right now, yes, it's bearish. Yes, we're close to the low of the Dow and the VIX. Doesn't matter. It's holding in the 20s. In the 20s says selling pressure. Make it real simple. So, and the Dow, as far as I'm concerned, let me go back to this. Now I'll go to this chart. INDU, as we wrap up, stay tuned for your swimming lessons and all the rest of the shows today. Plus, you've got Daryl, you've got, what is Wednesday? You've got Daryl, you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien, just a wonderful lineup. So, yeah, we are looking at the Dow. I want to see it close in the 17,070s level. That's really important. See.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.